Hello there, hope you're all doing well. Welcome back to another lecture. Today guys, I'm going to be discussing the well-known macro. So the macro windows we have, going to be breaking down essentially why they work, how I use them, and how I want you guys to use them as well. So basically, the macros themselves, as you know, ICT taught 950, 1010 for example. That's a 20-minute window where price is likely going to expand. But what we use is actually the extended macro. So it's extended by 5 minutes on each side, which means it's from 45 till 15. On every hour there's a macro. Of course, we have to pair that with the right session, as we're mainly just looking for AM, as we are trading the NQ and ES. So in that case, if we look at those macros during the right session, we're going to see something. And this phenomenon literally repeats almost every single day. I'm telling you, if you stuck to this single 30-minute window, this one right here, 9:45 till 10:15, if you only traded that, you would have more than enough opportunities in a week, in a month. When you realize that, it's a whole different world, honestly. Because you can just let everyone else get caught up in whatever happens prior to the macro, and then you just wait until it gets reached and you're like, okay, now let's see what's happened, let's see where I'm at and what I can potentially frame right here. Now the extended macros, of course, they line up with our time cycles, right? And that is why we want to be using the extended macros, as we know this window is going to be of interest. Now, why do these macros work? That's a question that many people ask. They wonder, why do we even have this macro? Like, what's it based on? Is it just statistics? Well, the thing is, guys, you have to remember, smart money, which we're trying to trade in line with, they only enter at specific prices and specific times. And when you realize that, you will understand that if you trade during those hours, during those times, those specific windows, as long as you're aligned, then you're going to be on the right side of the markets. And as you know, the market isn't designed for us. It's designed for those bigger players to be allowed to enter. So they, of course, they can't just enter anywhere. They can't just decide to go long or short at any moment they wish, because they're trading with way more contracts than you and me, right? Our 3 minis, they might look like much to us, but to them it's nothing, because they're literally entering with thousands of contracts, right? And for them to be able to do that, they need to align with time and price. And that's where the macros come in as well. If you understand your points of interest as price, your times of interest for time to align, we're going to be looking for those macros. Now the macro itself is, of course, this 30-minute window. Now what you might not have thought about is the fact that you can split this window into two. So inside of this one macro, you can actually separate them and expect different things from each side. Now this is, of course, maybe new information to you, but I'm telling you, go back in price and you'll see what I'm talking about. For example here, price expands lower towards 10 o'clock. You can see that we have now closed this 9 a.m. candle, and on the hourly chart we inversed an imbalance here. So we were bearish at this point. So the second part of the macro at 10 o'clock opens high into that point of interest that we had here, and is then allowed to continue. I've hinted about this on my Twitter, mentioned it maybe a few times, but really start to pay attention to this. I want you to look at the macros, especially this macro, and I want you to see how precise it truly can be. If, for example, the first part of the macro, if we expect that a manipulation is going to take place, the first part of the macro, we want to see the manipulation happen and preferably end by the time of the next half of the macro. Because what do we expect then from the next half of the macro? Expansion. So if we're just patient, we wait for that manipulation to happen around the right time, we see that everything is lining up, we see our setup, we know that now is going to be the right time for that right side of the curve, to expand. So we wait for price to finish manipulating, and then we anticipate that the next half is going to deliver price. Now, just to show you how many times this actually happens, another example right here. First half of the macro right here continues expanding lower. Second half of the macro opens high, continues down. And you see towards the end of the macro, price starts consolidating, right? Moves a little bit lower. And then in the next macro that we have from 10:45 to 11:15, what does price do? Orders are being filled, and that means towards the end of this macro, you'll see the second half. The first half was the manipulation, the move down here. The second half is going to expand. If you see manipulation in the first leg, anticipate expansion in the second. If you see, for example, you're looking for a reversal, manipulation, want that to end by the first half, the first 15 minutes. The next 15 minutes, we want to see price deliver. Of course, it can be allowed to go outside the macro and deliver a bit later. But if we scroll to the right, what do you see? Price delivers higher, reaches this series of imbalances right here. Then what does it do? Manipulates first half of the macro. Again, first half of the macro. Second half, what does it do? Expand. Do you see now why splitting up the macros this way, instead of just looking at it as one single macro, okay? I want you to pay attention to what happens specifically on each side of the macro. So for every single trading model that you have, I want you to limit when you look for entries to be inside of this window, okay? Now, sure, you might miss out on a couple of trades here and there that happened, right before the macro or in between, but it doesn't matter. In the long term, I'm telling you, if you focus on just executing inside the macro, the amount of trades you're going to take versus the one you miss out on, you will not regret having missed out on those few trades compared to the ones you're going to be able to catch just inside of these windows. This was a bit of a shorter video today, but I just wanted to break down, because I do get asked about this quite a lot, is the macros and how we actually view them, okay? It's not just any random time where price is going to expand or whatever, it's specific. There's always a reason behind why price is doing what it's doing. And we're aligning ourselves here with the algorithm and smart money. And that's what I want you to try to see as well. So with that being said, I hope you enjoyed this lecture, and I will see you in the next one.